Hey guys, David Robinson here. Welcome to the apartment investing journey. Really excited about our episode today. I've got Samson Jagoras with us today. Samson, how you doing?
I'm doing great, man. Thanks for having me, David.
I haven't had to redo an intro in a long time, but I just totally botched Samson's last name and had to re-go here. But that part will be cut out, and we're going to be rolling with this. But, anyways, I appreciate you coming on, Samson. A little bit about Samson. He is a strategic business consultant, the VP of Strategic Investments for ReMax Commercial Alliance, and the president of Growth View Properties. Over his 13 plus year career in business, executive leadership, and entrepreneurship, he's served as a futures and commodities broker, actively invested in real estate, built several businesses, and acted as the chief strategy officer for Madwire, which is an Inc. 500 marketing and technology company. And after roughly 9 years of scaling Madwire's revenue from 7 million to over 100 million, and from 35 employees to 600 employees in just under 10 years, he walked away from his high income position to go all in on commercial real estate, multifamily, and creative deal structuring. So, Samson, obviously, we're trying to condense 13 years in about three sentences there, and our podcast is all about the journey. And so, would love for you to back up and just talk to us a little bit about how this all started for you, how you got into your corporate career, and how you transitioned ultimately into the multifamily space here.
Yeah, sounds good. And don't worry about messing my name up. Most people try to make it like a soft J, like it's Spanish, and then they see me and I'm like Mediterranean and Greek and got a little German mixed in there. And so I just tell people, don't church it up. Just read it just like it looks.
Well, thanks for making me feel better about it.
Yeah. You're not the first and you won't be the last, so don't worry about it. But for me, I grew up in California, in a blue collar household. I was a skater kid, played a ton of sports, baseball, soccer, skateboarded primarily Southern California, listened to a lot of great punk rock music, which kind of was the driver for probably a lot of my life. There's that like punk rock mentality. I love kind of like pushing the needle and pushing myself a little bit. When I was about 14, I discovered that I loved football. I'd never played it. I don't know what it was, but something triggered and I wanted to go play football. So I played, fell in love with it. And that pretty much dictated my life for about another 9, 10 years. I've had a good high school career, ended up going to a Division II school called Western New Mexico. Played there for 2 seasons. After my second season, I knew that I wanted to go big or go home. D2 in a little tiny town in the middle of nowhere is not what you dream about when you're thinking about playing on the big stage. So I walked away from my scholarship and took the walk on at the University of Colorado. And thankfully, 1 year later, got put back on scholarship. And I went to school because I thought I was going to be an orthopedic surgeon or be somewhere in the world of physiology and health sciences. I got a degree in human physiology, and I did the total logical thing, which is I graduated on a Friday with a degree in physiology and walked into a futures and commodities trading brokerage on a Monday. and spent about 3 months studying to get my Series 3. You don't need any kind of degree to really get into the business. You just have to pass the test. In stock world, you get your Series 7 and maybe like your Series 21. I got a Series 3, and September 29th, 2008, the Dow Jones fell 777 points in a single day, which officially set off the economic housing crisis. And so I got baptized in the deep end of the pool, but it was a blessing in disguise because here I am coming out of college with negative dollars to my name. And I got a quick dose of economics and reality. And when a lot of people were leaving the industry, I was going head first. And it was right at the same time when TD Ameritrade, E-Trade, Schwab, they were all starting to roll out real-time quotes. And so we had to get creative in what we were doing. So we started doing more managed money, trading programs, trading systems, which is all fine and good until you're sleeping with a laptop next to your bed and watching the coffee market open at 2 a.m. It really starts to eat into your quality of life. And so after doing that for about 4 years, built up a pretty healthy book of business, about $1 million of retail clients from everything from gold sellers and gold producers to pig farmers to cattle ranchers to wheat farmers who were, primarily using the market to hedge. I started to get incredibly burnt out, but I loved the world of finance and investing. So I was going to leave and go be a financial planner, which I thought was kind of like the next logical step. Plus, there's still that entrepreneurial element. As a broker, you're for yourself, right? So you're hunting down the next customer, you're soliciting, you're building a book of business, you get paid on commissions. So you got to be intelligent and make trading recommendations. So I thought, well, I can do this. And futures to me became like glorified gambling. So I felt like, the financial planning route was probably made a little bit more sense. In the midst of 2008, when the world was melting down, the CEO of the brokerage firm actually spun off from that company and started a marketing and technology company with his son. And I was presented with the opportunity to come and run business development and strategy as they were kind of unwinding the futures business and scaling up the marketing and technology business. So I came in and helped build 4 departments, hired north of 400 people. We scaled that thing to $100 million a year in revenue. And after you do that for about 9 years, you develop a crazy amount of skills. You poke your head inside of a couple thousand businesses and you learn from a lot of other people's mistakes. And then you get to be 600 people and you kind of become something corporate. And that's not a bad thing. It's just necessary for the stage of growth. And I had all these skills and they were being limited. The only way that I can explain it is imagine you could play all these instruments, you could write music, you could sing. And we're just like, hey, David, we just need you to play bass guitar and we're only going to do cover songs, right? It's like, you can do it, but a part of your soul would die inside every single day. So after doing that long enough, and I realized I was just kind of hanging on for some sort of liquidity event or some sort of exit because I'm an equity holder in that business. I decided that it was time for me to take the leap. Since about 2018, had been repositioning my personal real estate portfolio and really unloading some of those positions that I thought were going to be weak hands if there was some sort of economic correction, some townhomes, some poorly positioned small multifamily. And then I started going to build a team for multifamily syndication and focusing on larger scale stuff. That was 2018. By 2020, into 2019, I had identified who those key partners were and what we wanted to do. And then we launched, full tilt boogie woogie in 2020 when the market corrected, which I had been waiting for. It took 12 years, but about every 8 to 10 years, the market corrects. And since then, we've been, we screen about 150 deals a month. We make about 2 verbal offers a week, 1 to 2 physical offers a month. We've screened in the last year, about $19 billion worth of multifamily real estate. So we're intimately familiar with that market and paying very close attention to it, but also being cautiously optimistic as to where the market is at and where it's going. So in between that, as you're doing like maybe 1 to 2 deals a year on a good year. I do commercial real estate advisory in a number of different capacities, from helping people figure out how to highest and best use for a property, how to take it through development, how to raise capital for it, as well as I do some consulting for property technology, like commercial real estate, financial technology companies.
Love it. Well, thanks for taking some time to sort of break down the last 13 years of your life. That's awesome.
Yeah,
there's a few pieces of that I'd like to dive into. The first is your personal real estate investing as you were going along this corporate path. There's a lot of listeners to our show that are in a corporate career. Maybe they're building out a business. They understand the value of real estate, and so they're investing in real estate. Some with hopes to eventually exit. What was that process like for you? Here you are, a futures and commodities broker. When did real estate investing start for you, and what did that look like along this path of doing what you were doing on the corporate side or the futures and commodities trading side?
Yeah, that's a good question. Real estate obviously just makes sense, right? It's a physical asset that you can touch, and in the world of futures, for most people, they don't understand it. It's a world that they've never experienced. But the futures market was created for producers, right, of commodities to hedge their physical product. So if I, raise pigs and I think that the price of pigs may potentially go up, but I want to sell some at the cash market. I can buy futures to try to offset some of the value that I may have lost. Or I could also use options in order to do that. What was interesting was along the way, people realized that leverage is a hell of a drug and they can make a ton of money by actually never holding the physical, right? If I think gold's going up, I can buy it. If I think crude oil is going up, I can buy it. And so I can control $100,000 worth of a contract with the crude oil for just $10,000 for some margin. And so it became very speculative. But the distinction was the people in my book of business who consistently made money owned hard assets. They owned physical things, and it changed the way that they invested. I'll never forget one of my pig farmers was up like $675,000 on a put option that he put on his pigs. And he wasn't even interested in selling it because he was making so much damn money in his cash business that it was really just a hedge for him. So it gave him a level of clarity of sleep at night. Like, to me, here I am like 25. I'm like, this dude's got 675 grand, like sell it, So it was just a different perspective. On top of that, I grew up in a household, blue collar. My dad was a contractor and a woodworker, and he'd been doing that since he was 13 years old. So real estate just made sense. And everybody I knew who was incredibly successful owned real estate, right? So this concept of passive income and cash flow is something that really appealed to me. And then obviously, as you start making more money, you start looking for ways to offset your tax burden. When I initially focused on real estate, though, I thought I had to have all the money, right? I had to have the down payment. I had to have the deal. I had to have all the ideas, the business plan, so on and so forth. That's how I approached my first deal. We bought a house, made a ton of money from it, took out a home equity line of credit plus some cash, bought a single family home, converted that to an up-down duplex. And that thing has since, 7-8 years ago or whatever, it's cash flowed like $1,000 a month, like clockwork. And if we put it on Airbnb, it's like $3,000 a month. So that was, first deal, slam dunk, home run. You're like, okay, I can get used to this. And I knew long-term that I didn't want to work forever, or at least wanted to have optionality, right? The ability to do whatever I want, whenever I want it. So I've been focused on that for a really, really long time. I wish I would have found syndication much sooner than I actually did. And I think most people don't realize they can get access to a better quality deal that has probably better returns and a better risk profile by investing passively than they ever could do on their own. There's like 5 players you need in any deal. You need somebody to find the deal, somebody to make the deal viable, somebody to get the deal over the line, somebody to bring the money or raise the money, and somebody to sell it on the back end. You only need to be one of those to really make some money in the deal. And it takes all of those kind of elements to make a deal successful. So people who are crushing it in their career, making, let's call it $200,000 a year, where they start to have $50, $75, $100,000 a year that they need to deploy, you're never going to be able to find deals that somebody like you or me, who are just in the game 24/7, are able to do. I mean, like I just told you, we screened over 1,000 deals this year, $19 billion worth of multifamily. We have 300 brokers in our network. Unless you're willing to put that level of commitment into doing it, it can be very, very challenging to find a good deal. And so as my thinking evolved, I moved into the marketing and technology company. We went through a few rounds of funding, raised some capital. I started to learn that, there's people with more money than they can effectively deploy. And so you can be a value creator in the market by being really good at finding deals, underwriting deals, managing assets, and providing a place for money to go. And that's kind of been the evolution of, where I'm at in multifamily real estate today.
Yeah, well, and I appreciate that. And there's always challenges along the way. I'm always interested in hearing about how someone, started to think about real estate and what their first move into the real estate space was. And for you, buying that single family home, letting the market do its magic, building up a significant amount of equity, tapping that equity through a HELOC, and then starting to buy additional investment property. Great way to start. And you mentioned that in roughly 2018, you started to reposition your real estate portfolio. What caused you to start to think about doing that? And what was the strategy? What was the plan behind repositioning the portfolio?
Yeah. So at that point, I'd been an active investor for 10 years, right? And I love economics, and macro and microeconomics, and I spend a lot of time studying the game and listening to people who are just way smarter than me. But at that time, I was trying to hire about 150 people a year. That was our pace. Unemployment was 2.89% when we were in the largest expansion since World War II. And so, the wise words of Warren Buffett, be fearful when others are greedy and greedy when others are fearful. And sentiments within the company, sentiments within the economy were very 2006, 2007-ish, of like, it's just so good and it can't stop, and irrational exuberance is the way that I would put it. And so, one of my skill sets is just futurism. Like, I have the ability to kind of see around the corner, and I just knew that it was just a matter of time. I was so convicted that we sold our 3,800 square foot home and downsized into a townhome, as well as sold off our real estate. And people thought I was crazy. They're like, what are you doing? 32 downsizing? You're supposed to be upsizing, right? I'll never forget it. It was actually 2 weeks before we had the COVID drop, the COVID crash in the stock market. I did a talk in Fort Collins, speaking, kind of calling out the local government and saying, hey, we need to do a better job of attracting small business owners to our community, specifically in the small business tech space, so that we can create more job diversity, because property value continues to climb, but wage growth is not following up on that. And I told the story. September 29th, 2008, Dow Jones fell 777 points in a single day. And I said, if that happened today, that would be equal to the market falling 1,300 points. And 2 weeks later, it happened. People called me like, you have a crystal ball. And I said, no, history doesn't repeat itself, but it tends to rhyme. And every 8 to 10 years in a fiat money world, the market will correct. And so I've just been preparing. I'm still preparing. I still don't think we're out of the woods. I think we threw a Band-Aid on a gaping wound in 2020. We printed, 4 times the monetary supply since 2010. And a bulk load of that came in 2020. And so, just being cautiously optimistic as it stands right now.
And, moving forward with that sort of unique skill set, I want to sort of combine 2 questions here. The first is your transition into working as a commercial real estate advisor with ReMax Commercial Alliance. Maybe describe for us what you do in that role and how your business model works. And maybe I'll ask the follow-up question, but ultimately I'm interested in how your mindset and the conservative nature of your thinking and what you think is on the horizon plays into how you're advising clients on their commercial real estate deals. So 2 questions there. Hopefully you can handle that.
Yeah, that's good. No, so when I tell people I'm a commercial broker with ReMax Commercial Alliance, ReMax and commercial don't generally go together. ReMax is one of the largest brands as it relates to residential, and they do have a very strong commercial arm. But why ReMax Commercial? Why not NAIA or CBRE or Cushman Wakefield or something like that? Because I was not interested in being a sales and marketing agent. You go work for Cushman Wakefield, they want you to be a multifamily specialist. You join the team, you're set with a quota, and you have to go and pound the pavement and sell multifamily. That's all you can do. I'm so far beyond that. I'm now going on 15 years of investing experience. I'm very versed in financial modeling, and that would be a step back for me to go kind of be just a sales and marketing guy. And so with ReMax, what's unique is it's where all the lone wolves go. It's where all the independents go. Most people who end up being there have been in other shops or other brokerage houses and finally reached a point where they're like, okay, I'm ready to just kind of go independent. I can't really go independent here. The path is really to go build a team. I don't want to build a team. I just want to do my own thing. So it made perfect sense for me to go there. And then the managing broker he's a lot like me, right? He's a commercial real estate guy. He does a ton of developments. He also brokers some deals. He thinks outside the box. And he knows that you ultimately make more money on the investment side than you do in the brokerage side. And so him and I just hit it off right away. How that business operates today is you know, examples of types of deals that I've done this year. Currently closing on 7 condos for a customer who is in the cryptocurrency space, very successful, doesn't know a lot about real estate, doesn't know how to value the real estate, doesn't know how to quantify the leases that are in place and how to actually like move tenants out of the space because they ultimately just want to take it over as a headquarters. That's fun to me, right? There's a lot more creativity that goes into that than just
So,
buying it and selling it.
so maybe that's a conversation that we can have about around that particular deal, just to give us a sense of what your role is. Because before we started recording, you talked about how you like to be on the equity side of things, or having ownership in the deal versus just taking a fee. And so I'm interested in hearing about how. And maybe we can use that as a little mini case study. We don't need to go into great detail, but I'm curious about how that deal comes together and your involvement in it.
Yeah. So this one in particular, I'm just acting as a broker.
Oh, gotcha. Okay.
But they had, basically their whole entire team, they have 600 employees decentralized across the world, but they have a headquarters here in Colorado. And so they needed to expand and get something a little bit bigger, as well as they just wanted a place. They're very cash heavy, right? So good problem, very good problem to have. Seems like a lot of people have that problem. So they were looking to buy something cash, but they didn't really know how to quantify all the different, we're talking about right now, they have 3,000 square feet. We looked at things that were as big as 40,000 square feet. What ultimately ended up happening is we put a couple offers on different properties that didn't pan out the way that we wanted to. We went back to the ownership group of where they're currently renting, and we're buying that entire condo complex with tenants. But to kind of dig into your conversation a little bit more, one of the other projects that I'm working on right now is actually not a Colorado deal. It is a Wyoming deal. I'm not licensed in Wyoming. So how do I get involved in a deal like that? Well, if I'm a general partner in the deal, I can sell it, raise money for it. I can do all these kinds of things. So, how would you structure something like that? Well, you have a conversation with those owners and you say, hey, my skill sets extend far beyond just brokering deals. If we're going to sell something in this remote part of Laramie, like we're going to have to build a brand. We're really going to have to put together a pitch deck and sell the idea for the use case on this. And if I were to broker this deal, here's what that fee would look like, right? But here's what the current value of this property is today, right? So let's negotiate a consulting agreement that leads to equity into this deal. And I'll help you get the whole thing packaged up and connect you with my network and my resources so that we can go take this thing to the market. The byproduct of that is sometimes that leads to opportunities like what's happening right now, where they had kind of designed it shovel ready. They wanted to do flex space personal warehouse. I don't think that's highest and best use. So I'm actually looking at turning it into a data center, which if you know much about Wyoming, it's a very favorable, let's call it cryptocurrency centric type of state with a lot of great tax advantages and great energy and cheap energy sources. And so that's something that these, we'll call them old dogs, it's not even on their radar, right? Because they haven't even never even come from that world. So they have a conversation with me and I go, hey, I think this is an opportunity for us to rethink how we're actually positioning this in the market. And I might end up just straight up buying that deal and putting that whole thing together. So
interesting. So would you say that your involvement in, with the commercial brokerage is more of an opportunity to have deal flow and deals happening around you? Do you see that as sort of, your entry into that space and just being around, you mentioned 600 brokers in your network. I'm assuming that those are, a lot of those are the commercial or ReMax commercial brokers that you have an opportunity to network with because you're in that space. But you're more interested in doing the deal rather than brokering the deal.
Yeah, 100%. And right before I got on this phone call, my managing broker sent me a off-market deal that he's going to sit in on today that he said could be a good multifamily development. So it's like I get first dibs at it. I can pass it over to my partners and we can start underwriting that to see if it makes a ton of sense.
Yeah, love it. Well, and then the second part to that question, and that was not a very well formulated question, but the second part of that question is, how does your advisory role in these deals as a GP, how does your mindset about what's happening in the future, you're trying to remain optimistic, but based upon what, you've told us, your feeling is, hey, there's something around the corner here. We've got to really reel in our assumptions about what's going to be happening in the market. How does that impact your ability to advise and get deals done in this market?
Yeah, I mean, I obviously, so let's just, play a couple of examples. Working with the cryptocurrency guys who are cash heavy, right? It's an all cash deal. There's no debt involved. That's a way different approach, right? They're buying it as a headquarters. They need as much tax write-offs as they can possibly get. Totally different advising strategy versus the lease that I helped a buddy sign last month for his restaurant, right? We're looking at that totally different. Like, what are triple nets actually at? And guy's an incredible business operator, incredible restaurateur. So he's building a second location, right? So he has a system and a model in place, and he's been through the highs and lows. So he's a seasoned operator. Looking at rural spots in Wyoming where we're doing creative, let's call it flex space. That's the reason I'm trying to pivot them away from that is there's 32,000 people in Laramie. It's like it's a tougher sale, right? Possible, but it ain't going to happen in a year. It might take 24 months to unload that whole entire property. So that really reduces your internal rate of return, and it extends the risk, because what if something corrects in the next 24 months? I don't have a lot of control in that, right?
Yeah.
What I think is interesting is we have reached a place in real estate where things are no longer valued on capitalization rate. They're valued off of price per door, or whatever they think somebody's willing to pay for it. It used to be that you could look at cap rate and back into a specific market and understand, okay, the cap rates in this market are X. Now it's just like, oh, it's an A grade apartment in Little Rock, Arkansas. Well, A grade trades at a 4 cap nationally. It's like, what planet are we living on, right? I'm not going to buy a 4 cap in Little Rock when I could buy a 4 cap in Denver. Like, it just doesn't, or right. Salt Lake or something. But that's the state of the market. And so there is a plethora of money. And if you have a great deal, money will very easily come to you. But confirmation bias is very, very real. And I find it interesting that I see very seasoned syndicators putting out very conservative returns, 6% pref, 12% annualized return. And I see rookies who've never experienced a downturn, never been in the fire, in the throes of a heavy downturn, pushing out better returns than them. So you need to tell me that you're finding a better deal than this guy who currently has $1 billion in assets under management, and your underwriting and your edge is just that much better. I'm not buying it. So it's constantly, it's a healthy friction. You should have a healthy friction between your partners, a healthy friction between your customers on, hey, I don't think this is the right move or the right strategy, and here's why. That's why they're paying you to be a consultant, not a broker, sometimes brokers get a bad rap for just wanting to get the deal done, right? And so a good broker, as you are and as I am, is challenging the scenario and challenging the status quo, because ultimately it's about helping them make the best decision, not just getting a paycheck.
Yeah, love that. And before we jumped on, we had chatted about this, deal. You mentioned, you rattled off how many deals you guys are screening and underwriting. It's significant. And you mentioned this experience that you had with the off-market 256 unit deal. Maybe just walk us through that experience to sort of shed some light on what you were just alluding to.
Yeah. So this was we look at a lot of deals, so we're intimately familiar with pricing, price per door, cap rates. And so when a deal comes across our desk and it was priced like this deal was, which was $41 million, it was off market, which means we're not competing with a bunch of other groups. It had a loan assumption on it. So we were assuming debt that still had 10 years left. It had no more interest only period. And it wasn't something that we could put new debt on because the yield maintenance was about $6.7 million. And so $41 million with an assumption, which included the broker's fee as well, made a ton of sense. I mean, it was a 5.83 cap and like a six cap market. We're paying a little bit of a premium on it, but there was an opportunity for us to, in short order, within a couple of years, be able to drive the rents up to get it to operate at a six cap. And we had, a 7 to 10 year time horizon on that with like a 62 million plus exit price. So we get everything lined up. There was an offering memorandum from the broker. They were communicating on financials. We had literally everything we did, all the way down to insurance and taxes, which, insurance and taxes are two of your biggest expenses. And we had the money effectively raised, right? Capital partners are on board. We're good to go. Full ask offer, everything you want. And they come back with, hey, we spoke with another brokerage house and they think we can sell it for $62 million. So it was literally a $21 million price increase. And the logic that the broker laid out to them, and this is what's most concerning and what you were alluding to, was, well, look, if you sell it at $62 million, you're going to be able to eat that $6.7 million in yield maintenance. They'll be able to put new debt on it, and look how cheap bridge debt is. They'll only have to raise like $12 or $13 million to acquire this property. Well, you and I both know that bridge debt is a short-term solution to a long-term problem, right? It is not designed to be the crux on which makes a deal work. It is designed to be the bridge, hence the name, right? High interest bridge debt to get to the next step after you've repositioned the property. And if that property sells at $62 million, it will be $100,000 per door above anything that's ever sold in that market, period, right? And so there's a saying that we always had in the stock trading world, in the commodities trading world, is pigs get fat, hogs get slaughtered. There's also another one that says the market always needs another sucker, right? And everybody's a genius in a bull market. And so those have always resonated in my head of, yes, the numbers work. Granted, everything continues to go exactly how it's gone for the last 10 years. And I don't know if people have looked at history, but savings and loan crisis, dot-com bubble, 2008, 2020, those are all things that have repeated themselves every 8 to 10 years, right? It's like clockwork. Except now what's happening is we're just getting worse and worse and worse and worse and worse about printing more and more money and trying to print our way out of this problem. And the challenge with that is eventually inflation cuts both ways. So it's great for asset prices. But at what point does the market, your consumer, your renter say, I'm not going to pay that price for rent anymore? And when they do, and people actually lose faith in the dollar, that's when the other shoe drops. And the bulk load of your renters are people who, let's face it, they have to leverage credit in order to continue the lifestyle that they're living. And if there's any kind of credit fees or credit freeze or credit crisis, then we're going to have a very similar event to what we had in the 70s rolling into the 80s and the savings loan crisis. And so we're just cautiously optimistic. I mean, we're going to continue to screen deals, and we're going to continue to insult people with offers that are probably well below what their asking price is. But we don't care, because at the end of the day, it's our responsibility to be stewards of the capital that we're managing and our investors. And we're just not willing to be another sucker. And when the market corrects, which I don't know when that is, I'm not even trying to predict it, but when it corrects, we will be poised to dominate.
Yeah. And I'm curious if you've tracked what has gone on with that deal, and whether or not, that was picked up by another group or another buyer.
I don't think they took it to market officially. I think that at the end of the day, they're actually long-term holders who were interested in capitalizing the market. And as I've done more digging, those guys are massive. They have 110 properties under management. So they're not a little guy. So they just tend to look at the world a little bit differently, right? When you're managing a portfolio that big, it's kind of a drop in the bucket on,
Yeah.
one deal.
Well, and I wonder if that's also, the experience that you had with such a dramatic, adjustment in price from, what we would call the whisper price, or, the guidance that you received from, whoever was pushing it out. Was there a broker on the other end of that, or was it just direct to owner?
There was a broker, which is where the offering memorandum came from, and the broker was working. And you know how those go, right? It's they tell you one thing, and you actually bring them the offer that they actually want, and then all of a sudden they change their mind.
Yeah.
So that's the
Yeah.
risk you run. But I'd rather
Interesting.
have I'd rather have off market deals and lose those than waste my time on fully marketed stuff.
Yeah. Yeah. Well, look, Samson, I've appreciated the time that you've spent with us, and it's been a great conversation. Just sort of hearing someone with your experience, the perspective that you have on the market, how you're navigating it, how you're still doing business while being very cautious, cautiously optimistic. I want to start winding down here, be respectful of your time, but I've got a few final questions for you. The first is, what would you say is the biggest challenge that you've faced on your real estate investing journey so far?
I think the biggest challenge is just people get into real estate. I think initially, and they think it can be a side hustle, and that's just not reality. Um, if you are going to get into real estate, then you need to decide if you want to be an active operator or if you want to be an investor. And if you just want to invest, you want all the benefits that go along with owning real estate, then you should probably just be a passive investor. I like being in the trenches and the throes. It's where I actually learn the most, is get kicked in the head a couple times. Um, and so it's just, getting in there and just not knowing what you don't know. I knew a lot and knew enough. I feel like now I've done it a million times, so I know it really, really well. Sometimes it almost feels too almost boring because it gets simpler as you get smarter. But yeah, it's overwhelming. There's just a ton of information, and where do you start and what do you do? And you don't have to do it all, I think, is the best. I kind of laid that out before. You need somebody to find the deal, somebody to make it viable, somebody to get it over the line, raise the money, and sell it on the back end. And you just need to decide if you want to be one of those. Maybe you're just like the ultimate deal sourcer, and you can
Mm,
join a team or be a part of a group, or do something like that. Or maybe you just want to be the money. Or like if you're like me, where you can underwrite, but it's brain damage. I'm super slow at it. I can do it, but it takes me forever to do it. Maybe you need to find a partner who can do it better than you, who enjoys that. What's
yeah,
your sweet
yeah,
spot?
yeah. That's great advice. What's the biggest win you've had on your real estate investing journey so far?
You know, um, I think the best thing I could have done is when I really wanted to scale up my multifamily business, it was going and finding a good mentor.
Mm,
Because you're either born into the business, you spend 7 to 10 years working in the industry, you go bang your head against the wall, or you find a mentor. That's it. And I think the best investment I could have made was finding the guys that I look up to and admire, who built a business that I wanted to build, and paid them a fair wage to teach me everything that they know.
yeah, yeah. That's great. Well, Samson, what's the best way for our listeners to connect with you? Maybe learn more about what you guys have going on, and keep a conversation moving forward with you.
Yeah, LinkedIn's a great place to check out, kind of real time updates with what's going on with our group and with me and what I'm working on. There's only one Samson Jagoras out there. I'm not too hard to track down as long as you spell it right. And I'm also pretty active on Twitter and Instagram. All same handle, Samson Jagoras. So
Yeah,
easy
you
to find.
Yeah, you're lucky. You've got the unique name, so all those handles makes it easy on you. Well,
Yeah.
look, Samson, I appreciate your time. I've enjoyed our conversation. You've got some great thoughts about what's happening on the market, how you're navigating it, some insights that I think our listeners will benefit from. I'll have links to those contact points in the show notes. So if you want to connect with Samson and his team, go down into the show notes right now, click on one of those links. And again, I appreciate you coming on, and I look forward to connecting with you again soon.
Yeah, sounds good, David. Thanks, man.